Orocobre is a company with 260 million shares roughly, very well capitalized, $260 million in cash after the capital raise that was done at $7.50, in which Toyota increased its participation in the company. The company has very, very good assets. The quality of the brine that we use to produce the lithium, as well as the quantity of the brine that we have in the flood zone of Olaroz is very good. Indeed, I believe it to be higher than our existing resources. The shareholder composition of the company is also a very strong one. Toyota as an anchor shareholder with 15% of the company, opening us the opportunity to place our lithium not only in the Asian markets where Toyota has been trading metals and rare earth and different things over the last years, but also as a feedstock for the supply of Toyota electric vehicles. Very quickly, the last performance, last March quarter, we have had a very good performance. I think that everybody is familiar with the issues regarding the climate and the impact of the climate on the evaporation in our ponds. Since our process is based on solar evaporation in the ponds, that evaporation concentrates the brine. The brine is then processed through a plant. The fact that during the months of January, February, and March is a rainy season in the area, we have been impacted by higher than previous year's rains. However, we've been able to keep our production up and increase production as compared to the previous comparable quarter of the year before. Having said that, the company continues to enjoy a very good profit, even at lower prices environments. We disclose a price of roughly $9,000 in the first quarter of the year. We are seeing a price in the range of low 8,000s for the quarter that we are now going through. In spite of that, the good cost that we have access to, our low operational cost, enable us to still enjoy a profitable margin of around 56% on sales. It is important to mention that given the quality and quantity of resources and the process that we use, Orocobre is positioned at the bottom end of the cost curve, making us a very competitive producer. Chris don't mention it, I'm coming from the oil and gas industry, and this is kind of a second time in my life in 3 years that I'm seeing a significant downturn in price. And what I've learned is that the only hedge that you can have against price volatility are low costs. And this is where we have to focus and continue to improve our operations. We are continuing to move ahead with the expansion. Stage 2 is well on its way. As said before, the company is fully funded through the expansion and the plant that we're building in Japan jointly with Toyota to manufacture lithium hydroxide. Something which is important, we want to manage the projects on cash basis. And this is a project that has been generating cash and paying back its debt since the very beginning. From $190 million of debt, the balance of debt today is about $110 million. That shows that the project is not only able to earn positive EBITDA, but also generate enough cash to continue repaying the debt. All the repayments are being sourced from operational cash flow. We are not using the cash position to repay our debt. In terms of a quick operational review, I joined the company in November of last year and became CEO in January of this year. The first board meeting that I had with the board, I communicated what the vision for Orocobre is. And the vision is to become a world-class supplier of lithium chemicals. And there are two important words in that definition. One is world-class, which deals with this idea of having to deliver the best possible quality in the product that we have to deliver at the lowest possible cost. And the second one is chemicals. Our operation looks more as a chemical facility than as a mining plant. We pump brines from underneath the surface, pretty much as you would pump oil from in an oil field, and we then concentrate those brines in evaporation ponds and transform them into lithium carbonate in our plant. That's more focused as I would define it as a chemical process than as a mining process. As said before, the key attributes that Orocobre have, apart from the high resources in terms of quantity and quality, the strong team, this is something that I always highlight. This is a team that was able to bring onto production a project from Brine that over the last 20 years, nobody else was able to do. Since FMC started with a project in Salar del Hombre Muerto, it took 20 years to get another project back into production, which was Orocobre. That tells you a bit of how difficult it is to bring these projects on stream and be able not only to finance them, but to get them operational and productive, which is something that we will access later. Regarding the operational objectives for the company, I have defined 3 axes that we want to work. The way I define the 3 axes is like more than axis, is like a gearbox with 3 gears. Gear number 1 is safety. It is of the utmost importance in a chemical plant to run it under very strict and good safety conditions. Number 2 is quality, and it is very important. The lithium market is becoming more and more quality oriented. The customers are requiring every time tighter parameters in terms of which are the contaminants that go into the lithium. It is very interesting, but today nobody questions whether it goes 99.8% of lithium within the content of the product, because everybody knows that that is lithium. The discussion with the customers is what impurities go in the remaining 0.2%. Magnetic particles, sulfates, calcium, magnesium. Some customers can handle more calcium, some others have a different chemistry in their batteries and can handle more magnesium, and it all depends on how you negotiate those impurities with the customers. And reaching those quality levels is becoming more and more important. If you think of the difference between an electric vehicle and an internal combustion engine, is that in the engine, the performance of the vehicle depends on the design of the engine, depends on how the engineers design and put together all the valves and cylinders and everything. In an electric vehicle, the electric motor is something like 20-25 moving pieces. We've been putting these motors around for the last 100 years, and there's not a lot to do regarding the motor. The performance of the vehicle depends on the battery, on how quickly the battery can give the energy to the motor and how quickly the battery can be recharged. And if you have impurities, and depending on the impurities you have in that 0.2%, in the long run, after hundreds and thousands of cycles of charge and discharge, those impurities will affect the performance of the battery. That's why this issue is that important. Moving ahead, the third gear, which spins on these previous 2 ones, is productivity. The first 2 ones, safety and quality, are recreating a culture towards improving the safety and having a better quality in our operations. Productivity is about reducing the costs and increasing the output from our operations. Key areas of focus that I'm currently working on, or priorities. Number 1 is getting the operations right and working on these 3 gears: safety, quality, productivity. Number 2 is the expansion project. We are building a plant with a nameplate capacity of 22,500 tons of primary product that will be used to feed our third priority, which is a lithium hydroxide plant that we are doing in Japan jointly with Toyota. The expansion is fully funded, well underway. We are growing from 500 hectares of evaporation ponds into 1,500 hectares of evaporation ponds, building 1,000 hectares more, and we are increasing the production capacity by 1.5. That means that we will have more pond area available for the same amount of for 1.5 times amount of production. The other important point is the lithium hydroxide plant in Japan that we are building jointly with Toyota in Naraha. That plant will enable us to have lithium hydroxide available for our customers, and that plant is being built next door to a plant that Sumitomo has put together for manufacturing cathode, that will supply the cathode for a plant that will manufacture batteries. That is a joint venture recently announced between Toyota and Panasonic for the Toyota vehicles. So half of the production coming from the expansion will be taken by this project in Japan. And we're currently working on placing the other half of the production of that project. This is a quick view of how the expansion is progressing. What you see here, the ponds that have numbers are the ponds that have been added. All this pond area will continue to the southwest, and as you can see, these 2 large ponds have already been brought onto production, already loaded with brine. These 2 are on their way. The black part is the liner. this pond has the earth has already been moved, and the liner is yet to be put, and project is well on its way. We talked about the Naraha plant. Important to say, the expansion and the plant in Japan are fully funded in a joint venture agreement with Toyota. We renegotiated as a consequence of this plant our joint venture agreement with them. The joint venture agreement will enable us to consolidate accounts, as Chris was saying, on the operations in Sales de Jujuy, which is the Argentinian operations of Orocobre. That will enable us to show a more standard balance sheet and an income statement easier to understand. I have to tell you myself, when I got contacted by Orocobre to join the hiring process that was being conducted by Egon Sender, I struggled to understand the financials of Orocobre as well. So this will help us significantly, particularly will be more easy to explain to your customers. As said, plant fully funded. The beauty of Toyota as a partner is that we are being able to finance 90% of this project with debt below 1%, secured by Toyota Motor Company, and also we enjoy the benefit of very low rates for the development project in Argentina, which is fully funded through equity and debt already agreed. The plant in Japan has a structure in which we have 75% of the economic interest. However, we hold 49% of the voting right, and the reason for that is we needed it to be a Japanese company because we enjoy a subsidy of $27 million on capex from the Japanese government. That brings the cost of the plant from expected $77 million to $50 million. This will be the first, something interesting is this will be the first hydroxide plant in Japan, and that will position us in a very competitive position in the market. There's something, hydroxide is difficult to travel. Lithium hydroxide reacts with the CO2 from the air and turns into carbonate after some time. So having the ability of having the plant next door to the cathode manufacturer enables us to reach them with a very good quality, not only the project that Toyota and Panasonic are putting together, but other battery projects in Japan. Very quickly, with regards to the market, and before opening up for questions, there are two catalyzers in the electric vehicle market. Number one is how much are the governments willing to invest in developing the infrastructure. Number two deals with how is the demand growing for electric vehicles. We are forecasting reasonable demands for electric vehicles in the range of 3.5–5% penetrations. Today, the amount of electric vehicles being sold, half of the vehicles being sold are sold in China. So, putting together projections from today's market becomes very difficult because the future is much, much larger than the existing performance, and that creates a lot of volatility in the market. And the other one is the amount of money that the governments are willing to invest in developing this infrastructure. The electric vehicles will be very difficult to sell if you cannot go and recharge your vehicle in a point that is close to your place, close to your job, close to your house, and a lot depends on the range of the vehicles and the availability of infrastructure in the market. Clearly, China and Europe are the ones investing more money in developing these infrastructure networks. We expect to see over the next 10 years as much infrastructure investment as we have seen until now in the arena. The other point is roughly understanding what market projection is telling us. The market is going through a downturn. The market was at $5,000 per ton of lithium in about 18 months ago. It skyrocketed to about $18,000 per ton for lithium carbonate 9 months ago, and it is today in the low $9,000 per ton of lithium carbonate. Clearly, the market wasn't 5, wasn't 18, but it is not 9. Should find an equilibrium somewhere. We think that today, the market is experiencing a delay in the capacity of battery manufacturers. If you go to buy an electric vehicle, they tell you it takes 6 months to deliver the vehicle to you, and they will tell you that the reason is because the batteries are not there. The lithium is there, but the battery manufacturers are not increasing their capacity production as expected. Reasons for that, many, Particularly one is the technological problems that the 811 batteries are facing in order to be able to produce them massively and for them to remain stable when they are put into operations in a vehicle. 611 batteries that run on lithium carbonate, 622 batteries, excuse me, running on lithium carbonate are more stable, the famous LFP batteries, and they seem to be picking up again to cover part of the demand of the 811 batteries that run on hydroxide. That's our view, long-term view of the market. We think that the demand is going to grow faster than the supply, and that is somehow boosted today by the fact that at the current price level, all the projects that are being announced are not getting enough financing, nor being able to tackle the market properly. Taking that into consideration, when the demand picks up, supply will not be able to cover everything that the demand will request.